Hi there, and welcome to this video where I will discuss if the discussed trading strategy from this video is really worth your time, energy and money. And this time, let's not waste any more time and start right after the intro. This strategy uses two indicators, the range filter buy and sell and the Frama channel. For this strategy, both indicators will keep their default settings. The strategy is supposed to be a scalping strategy for lower time frames and trades both long and short. And the trading rules are very simple to follow. For long trades, the range filter should have a buy signal first, and on the very next candle, the Frama channel indicator should have a buy signal as well. Or the Frama channel indicator shows a buy signal and on the very next candle, the range filter should have a buy signal. Then it is also valid. However, when the signals are on the same candle, or when the signals are more than two candles apart, then the signal is not valid and the trade should not be taken. The stop loss is placed below the middle line of the Frama channel and the profit target is set at a 1.5 risk to reward ratio. For short trades the signals are reversed, so either the Frama or the range filter has the first or second confirmation, and the two signals should follow each other. They cannot occur at the same candle, nor can they occur between 3 consecutive candles, or longer. Enter the trade and set the stop loss above the middle Frama line and set the take profit at 1.5 times the distance between the trade entry and the stop loss for a risk-reward ratio of 1 to 1.5. It is interesting enough to make a Pine script strategy and an algorithmic trading strategy for use with the FracTrade bot to see what its overall performance is. I tested over 50 pairs, multiple time frames and a large dataset for the most accurate test on its performance. Now if you want to download both the Pine script and the Python code for the trading bot, both are available on my Patreon site for the patrons. I also have a full backtest report on the strategy's performance on my personal setup. And for beginner algo traders, I also have a book available on both Patreon and Amazon that can get you up and running with automated algo trading. But what about the backtest results themselves? Well, if I use the trading rules in TradingView with the trading strategy Pine script, then I see very mixed results with the different trading pairs. On higher time frames the gains are actually minimal and on some pairs there aren't even trades over their complete timeline. Others are losing, but luckily with minimal losses. Switching to lower time frames, then there are more opportunities to trade, and gains or losses are also higher. But my TradingView account limits me to only backtest over the last year or so this is not a complete overview of what the strategy is capable of. But what I already notice is that the rules of the trading strategies are quite strict and can sometimes prohibit to take a trade that could be very profitable in hindsight. I understand that these rules are meant to prevent many false trades, but I personally do not mind more false entries if it also has the chance to being able to trade more profitable trades as well. This is also visible in the results of the backtest over a longer period of time and on multiple time frames. The 1 hour time frame has the best score overall, but with 3,555 trades and only a 63% overall profit, the strategy is not as effective as being presented in the original video. It only has a win rate of 48% and with a profit factor of only 1.04, it is barely profitable. Long and short trades are evenly distributed and there is not much difference between the profitability in both directions as well too. To improve the performance of the strategy, I would really look out for higher level market sentiment indicators to prevent trading when the markets drop. Especially because I expected to see a rising equity curve in both market circumstances as well, because of the short trading capabilities, but for some reason the equity curve drops and the drawdown rises after the last cycled market top, which needs more investigation why this is in this case. As for the end conclusion, I do think that this strategy's performance can be improved by removing the risk to reward level type of taking profit and make it a more trend trading strategy. The Frama indicator looks to be well suited for this. Also, the original video stated that this strategy has very accurate signals, however this can also cause potential profitable trades to not to be taken because of these rigid entry signals. Maybe using a little bit more loose rules can result in more trades that can also be more profitable when trend trading. Now finally, investigating into why there are drawdowns in downward markets, where I expect to also have profit in short trading, should be done too. But this is for you, the audience, to execute if you really want to build further on this strategy. I am very curious to read in the comment section how you managed to improve this trading strategy further. But for now this is it, I will continue to search for the best trading strategy further and I hope to see you in the next video. Goodbye.